Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. As always, guys, why is the Fed cutting rates when we're at near all-time highs in the stock markets? Well, we're going to talk about that in today's video. Let's dive in.
Trade Genius.
So, Bob, why are we cutting rates when things seem hunky-dory in the stock market?
Yeah, I mean, it sounds, implausible that they would even consider doing that, except that the stock market really took leave of its senses here with all the liquidity that got poured into the economy that didn't go into Main Street, but really just shuffled itself right off to Wall Street. You got to remember, economy's two different animals, right? There's Main Street and Wall Street. Wall Street's been feasting, and if you throw this chart up here, Phil, Main Street has been dying. And so, we're getting a lot of pushback, not on our podcast so much, but in the Twitterverse. Anybody who says, hey, we're going into recession, they're getting openly mocked because they say, well, it doesn't always happen. That is true. But they don't tell you that it almost always happens when this happens. And if you notice, you talked about this before, Phil, this is the rounded cut bottom on employment. Right.
Yep.
And we know now that this is actually worse than what they show because this doesn't reflect the revisions they put in. So we're really at a point now where the cake is baked for recession. And when you have recession, I don't know, last time I checked my stock almanac, stock prices don't go up in a recession, they fall. And stocks don't go up when rate cuts happen, they fall when we go into a recession. So everything's lining up for, what you and I were talking about before the show here is that, hey, are we really going to kiss the double top, do a peekaboo, and that's it? Very much possibility. What do you think?
Yeah, we told everybody, hey, brace for the run up into the rate cut, right? Because that's historically what markets do. And we were saying that when we were dumping down there in August, right? And it didn't seem very probable that we would be near all-time highs at this point in September, but yet here we are. And, we could even see a reaction tomorrow where we get the 50 basis points. And if you look, I think on Twitter, a lot of the sentiment is like, oh, if we get 50 basis points, we're rocketing out of here. And like I was saying yesterday, I think, yeah, but what usually what ends up happening is that if you have a big run up to a move, you really have to be careful on the other side of that news event, because a lot of times you're going to at least backtrack, some of the move up that we've had. Even if we went back and retraced 50% of this move, you could be down, 150 points lower, easy. So what gets tricky is like, okay, where does the sell the news event happen? And it could happen Thursday, it could happen Friday, or we could be sustained up into OPEX. This is quad witching week, right? Quarterly, monthly, weekly OPEX. So it could sustain into Friday. And then once those hedges come off that expire with OPEX, then we get the pullback. So maybe it doesn't start until Monday. But if you're drawing in crayons, we should sell some of this move off around this event. The other thing too, Bob, is that we've had liquidity. Net liquidity has been rising. They've been draining the reverse repo as well. But remember, September 16th, corporate earnings, right? Or corporate taxes are due. And so the TGA is going to build from here. And that's going to drain liquidity. So that's why seasonally, we talk about that pullback in September to October. A lot of that has to do with the seasonal flow of net liquidity, because when the TGA, which is the Treasury's checking account, builds, it pulls liquidity out of the system. So we had that effect as well. So you have this big run up, you have a news event, sell the news, you have a seasonal drain of net liquidity. And that's why you can have these kind of what I would call a little bit of a nasty pullback back into like the first or second week of October. Now, if we're right and we are still going to see a blow off move, and this is just part of like that first move up to get to those new all-time highs and where we could potentially gun through the election into like, SPX 6100, then we really are going to want to see a move that manifests pretty aggressively starting sometime in October and then right through November. And you get that quarterly, fourth quarter bull run. And the thing that helps that is that you're positive for the year, right? That happened last year. Whenever you are positive into Q4, I don't have that chart up, but it's blatantly obvious that when you're positive by the end of Q3, that wealth effect translates over to Q4 and you end the year up even more. Our bear market years, though, when you're negative into Q3, Q4 is horrible, right? So we have this recipe for a blow-off move. We'll have to see if it manifests, but so far, so good. Now you say, why would that happen in this market when we got unemployment doing this? Well, that's just the nature of the beast. You have a lot of liquidity that's left over still from a lot of money printing, and this is kind of how this stuff ends, right? It ends in a grand crescendo. But make no mistake, this unemployment rate creeping up here is really what's going to drive the market and the GDP contraction. The market's down, GDP is going to contract, Fed's going to continue to cut cut. And I think you're not going to really see the end of the bear market until potentially we see double-digit unemployment rate this time. Because if you got to think about it too, there's a lot of businesses still looking for workers, even now, still looking for workers. I think unemployment could actually be quite high this go around, Bob.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads that talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you have not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room, we have the algorithms for you, we give trades out every day, we educate you. So go to tradelikeagenius.com, check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening. Yeah, and the other thing too, Phil, I'm not going to try to predict the macro on this because the election is so volatile right now and the people are so whacked out, hence the another assassination attempt on Trump. But the next 2 weeks, you're 0 for 10 to have a positive next 2 weeks when we have a setup like we did for the first half of the month. So I'm definitely expecting a pullback. Now we go out of buybacks are off the table until you get almost to the end of October too. So, I'm thinking maybe the next 4 weeks could be a little rocky before you start getting into some opportunities where potentially there's good earnings report. But as you know, I'm more bearish than you are. I mean, it took a long road here to climb this thing to a double top. And but you know what? Blow-offs happen and walls of worry too. So I'm just taking it literally day by day at this point because it's so fragile. Look what happened today. Market's up, everything's cruising, setting up for the Fed, and then something burped over in Israel. The market hit a double top, and then the most market capitalized companies in the world just dumped. And people, I was out. I came back half hour later. I'm like, why did the market sell off? I mean, it's going to happen that fast for people, and it's going to get more violent like that. We are really, really, Phil, setting up so scarily like 2007, 2008. It's almost like we're in Groundhog Day. And it goes to your point here. We get a little bit of a pullback for a week or so, and then we get a 3-week ramp job, and then it's it. So watch for that. I mean, if the algos have programmed it that way, it's just amazing to me. And then you're looking at basically 13 months of hell.
Yeah, I think that is the most probable outcome. So the next couple months are going to be one for the books for sure. And it's going to be really interesting to see how exactly that plays out. But like we've been telling you guys, if you need help navigating these markets, we're going into probably some of the most volatile, rocky markets you're going to see for probably a decade. It's coming up here. And so if you need help navigating these markets, head over to Trade Genius, check out our specials. We'd love to see you in the room.
Hey, one more thing. Hey, we're going to go live tomorrow, guys. So check it out. We're going to probably come on like 5-10 minutes before the Fed announcement. Our maestro Phil will be on the mic, and I'll be sitting there and taking the chat room out. So it's a lot of fun. A lot of people show up. Really good information. Really will help you set the stage for what happens on Thursday and Friday. And remember, finally, bear markets, you just can't short them. You think long markets are hard. Short markets are even harder. So buckle up. Thanks for listening.
As always, thanks for watching. We'll see you guys on the next episode. Take care.
Trade Genius.